Good morning, investors and distinguished guests. I would like to welcome everyone to the SET Opportunity Day of Thai Union Group Public Company Limited, or TU. The executives who are joining us today include Mr. York Ire, who is coming, the Group CFO, Mr. Bes Vayanon, IR Manager, and myself, Punpuin Bunmishot, IR Analyst. For an agenda today, we will discuss the company's overview, key highlights, recent developments, and financial analysis, sustainability issues, and outlook of the company. I would like to start with a brief company overview. Thai Union is one of the world's largest seafood processor and exporter with 39 years of experience. We started business in 1977 as a private label tuna packer for other brands. Over time, we have acquired more brands under our portfolio. Cozy, Chicken of the Sea International in 1997, the third canned seafood brand in the US. MW Brands in 2010, the leading brand portfolio that owns leading European seafood brands, namely John West, Petit Navire, Parmentier, and Marabou. Other recent transactions are Merlion, leading chilled smoked salmon producer in Europe. King Oscar, premium brand of canned sardine in Norway, Australia, and the US. Orion, the lobster supplier in the US. Fish, shelf-stable seafood leader in Germany. And Chenu, lobster processor and suppliers in Canada, which we have recently acquired this year. Thai Union is the leader in canned tuna business with largest canned tuna production share of 18% of global capacity. Thai Union is a food-focused company supported by 3 product segments, including ambient seafood, such as canned tuna, canned sardine, and mackerel, and other canned seafood, frozen chilled seafood and related, such as frozen shrimp, chilled smoked salmon, and other seafood. And the last but not least, pet care and other business, including pet care products, value-added products, and other products. Series of acquisition over the last 20 years allow us to have the global leading seafood brand portfolio. For example, John West, number 1 canned seafood brand in the UK, Ireland, and Netherlands. Petit Navire, number 1 canned seafood brands in France. King Oscar, number 1 premium canned sardine brand in US, Norway, and Australia. Select Tuna, number 1 canned tuna brand in Thailand. Chicken of the Sea International, number 3 canned seafood brand in the US. Chicken of the Sea Frozen, number 1 frozen seafood importer and distributor in the US. Marabou, number 3 tuna brand in Italy. Fish, the leading ambient and chilled fish brand in Germany. We are the owner of the leading brands in major markets across 4 continents: USA, Europe, Asia, and Australia. In first 9 months 2016, we have around 42 billion revenue from branded business, or 42% of our total sales. And now I would like to pass to stage to Mr. Bes Vayanon to start the key highlight of the third quarter.
Good morning, everyone. For the third quarter, we have been receiving a very tremendous success, particularly in the area of sales. We have received record of very solid sales. During the third quarter, we have recorded $1 billion in terms of revenue, which reports 77% sales growth. Most of which some of which has been contributed to both the organic sales growth and the acquisition that we happened during the first 9 months of the year. However, our operation has seen some pressure from the salmon business, in where the salmon price remained very high, but we have still seen some recovery in the salmon business in the third quarter from the second quarter. And the tuna price has been a bit higher than expected. which has put some pressure on our margin as well. However, due to the stringent cost focus, we have reduced the SG&A to sales ratio down to about 9% during the third quarter, which is really low level. And the low cost of debt has also been helping this through a numbers of refinance of debt during the year as well. And on top of that, we have been received a favorable positive one-time tax credit from Alliance, which is our salmon business in the European continent, which has been helped us in terms of lessening our losses in the salmon business. For the summary, our sales have been up by 8%. Supported by, like what I said earlier, and we have seen the organic growth in terms of the volume sales growth. We have seen the growth from the acquisition that happened along the year. In terms of gross profit margin and operating profit margin wise, we have been pressured, mostly due to the fact that the raw material price been at a very high level. Salmon price been up very significantly compared to last year by about 50%. Tuna price been up as well compared to last year. But on the net profit level, we managed to decline only managed to remain very stable, which report only declined about 2% compared to last year, despite a significant pressure on the profit margin, on the gross profit margin level. In terms of 9 months, the net profit is still, the net sales still up by 10%. Gross profit has been up by 3% and net profit has been down by 4%. But if we discount the massive foreign exchange gain that occurred during the first quarter of year 2015, the net profit should be in a better position. However, the net debt to equity, we still remain at very strong at 0.92 times net debt to equity, which reflect the strong balance sheet situation of the company. For the sales, we have still record record quarterly sales during the third quarter of this year of 35.1 billion baht, or equivalent to about $1 billion. That is a record high in terms of the quarterly sales that we will ever report since our listing of Thai Union Group. For the recent development, there has been a numbers of significant development and transition that happened with the company. For the CG Award, Thai Union has been ranked, now upgrade being to excellence according to CG scoring by IOD, the Institution of Director of Thailand, to 5-star from 4-star previously. And on top of that, Thai Union Group CFO has received the leading CFO award. From the Finance Monthly of year 2016. For the other sustainability efforts, Thai Union has still been nominated on the 3rd year running for the sustainability index for Dow Jones Sustainability Index in year 2016. We are one of the only 15 company in Thailand has been listed in the Thailand index. For the recent acquisition, during the third quarter, we have acquired the company, the restaurant chain called Red Lobster. We have spent $575 million to buy some direct stake and some investment in the restaurant chain called Red Lobster. And Red Lobster is the world's largest seafood restaurant. It has presence based in the North America, about 700 stores in North America, including Canada, and has gross sales of over $2.5 billion. So this is a very significant investment that we made during this year. We hope to enhance our food service channel and improve our reach to the end consumer better with this acquisition. The transaction has already been complete, but it only happened in the October of this year. Therefore, the transaction we recognize from the fourth quarter financial statement onwards. For the sustainability index, of course, we have been listed for the 3rd year running in Dow Jones Sustainability Index, along with 15 companies in Thailand. And now for the financial result. For the third quarter, our sales has been again about the record quarterly sales of $1 billion, 35.1 billion baht in baht term, has been up by 7.7% compared to last year. The growth has been driven by M&A, the acquisition that happened during this early in the year, including Rügenfisch, which is the leading canned seafood brand in Germany, and the company called Chenus, which is a lobster trade supplier based out of Canada that we acquired during the end of the second quarter of this year. The chilled and frozen seafood product, which salmon is part of this product category, due to the significant increase in salmon pricing, we have managed to increase in terms of the pricing of our salmon product as well. So as a result, this has been contribute partly to our sales growth during the quarter. Pet care business still report a strong, solid business growth and still report a good profit margin. For the 9 months, our sales still grow by almost 10% compared to last year. You can see that we have seen a significant improvement across the board in terms of our business segment. Our shrimp business has been growing, sardine has been growing, salmon sales has been growing along with other type of business. We have seen some pullback in terms of the tuna business. That has been partly due to the pent-up demand. We have seen a very strong sales during the second quarter of this year. Thus, it has cost some of the sales off in the third quarter of this year. But nonetheless, I mean, for the full year picture, the tuna business remained pretty stable compared to last year. I mean, if you look at the 9 months, the tuna business only declined by 2%. But on the other hand, I mean, other business, we have seen a very solid growth across the board. For the first 9 months of the year, we have already recorded the sales of 100 billion baht. Okay, this is the record for the 9 months since our listing history. For our sales breakdown by geography, we have our sales majority being contributed from the US. During the first 9 months, the USA still contribute 39% of our total sales. European continent still contribute to 33%, Japan 6%, and Thailand domestic market of 8%. The remaining 13% has gone to the other market like South Africa, Canada, and other European, African country. For the sales breakdown, I mean, we have due to our strong portfolio of brand, during the first 9 months, the branded sales account 43% of our total sales, while the private label, the contract manufacturing, in other words, has been contribute the remaining 57% of our total sales. For the gross profit, this is the area we have seen some decline. Despite a strong sales increase, our gross profit has been declined by 12% compared to last year to 5 billion baht during the third quarter of this year. The gross profit margin has seen some pressure. The gross profit margin is now down to about 14%, driven by both the rising tuna price. The first 9 months tuna price been up by 15% compared to last year. And also the salmon price is still about at a very high level, which I mean last year salmon price was about 40 Norwegian kroner per kilogram. As of the third quarter of this year, the salmon price been lingering around 60 to 65 Norwegian kroner, which imply roughly about 50-60% increase compared to last year. Despite the best efforts of trying to pass on the cost and price renegotiation, we still see some impact on our gross profit margin due to such a significant increase in salmon pricing. But of course, if you look at in terms of the 9 months result, our gross profit has been standing at 15.2 billion and it still increased by 3% year on year compared to last year. For the operating profit, we can see here that the operating profit during the third quarter is 1.8 billion baht. It's still down by 20% compared to last year. The operating profit margin has also been declined compared to last year as well. But I mean, if you look in the details, the SG&A to sales ratio during the quarter was down to only 8.7%, we acknowledge that there has been some of the incremental one-off that happened during the third quarter, but even strip those off, the SG&A to sales ratio remained at only 9.1%, which implied that we are very well in the target compared to our SG&A to sales ratio target of 10% for the full year. So we believe that we have worked on numbers of cost rationalized initiative, and as a result, we have achieved a very satisfactory result in terms of pushing down the SG&A to sales ratio. For the first 9 months, compared to the gross profit, there's been seen a decline of 3%. Operating profit for the first 9 months has seen a decline of only 2.4%. Down now for the first 9 months, we report the operating profit of 5.4 billion baht. For the net profit, which is the key important, we have reported a net profit of 1.6 billion baht, literally unchanged from last year, down only 1.9%. While on the quarter-on-quarter, we have seen some improvement. In terms of the year-on-year reduction, while we have seen some pressure from the rising raw material price that we have been mentioned earlier, which has put the pressure on both the gross profit and operating profit line. The net profit has been back up to the stable level, partly thanks to the stringent cost control on the SG&A line, the lower finance cost in which we have done a number of debt refinancing along the year. At the very beginning of the third quarter of this year, we have launched a 10 billion baht bond, which come with a very low effective interest cost of lower than 3% for the entire 10 billion baht. So we have also incurred some of the tax credit from the loss-making salmon business in the European continents. We have capitalized also the GI investment due to the investment promotion scheme that we've been promoted by the government, but has not been factored in the quarter before. So as a result, our net profit during the third quarter has become pretty stable despite a very difficult environment as we have seen for the full year. For the first 9 months of this year, net profit was down only 4.2% to close at 4.3 billion baht. If it's not for the first quarter FX gain during the first quarter of year 2015, we should have reported this. Our net report for the first 9 months should be in a better shape. For the normalized net profit, just to take out some of the abnormal, the one-off operating event out, such as some of the tax credit that should have been incurred during the first and second quarter in our European salmon business, and the other items such as the amortization of the GI investment privilege from the government, our normalized net profit would have been down by 9.2%. For our debt and balance sheet structure, we have been successfully refinanced most of our debt into Thai baht currency with a 10 billion Thai baht bond that has been issued during July of this year. We have and those are used to refinance some of the US dollars debt for our subsidiary. As a result of that issuance, our debt are now mostly comprised of Thai baht at 99%, and the rest 1.2% are still incurred by our subsidiary in a foreign country. In terms of the debt maturity, we have managed to increase our long-term portion of debt to much more significant level. During last year, it was only 41%, which is a long-term debt. At the end of the third quarter of this year, the long-term debt portion has been increased to 57%, while the short-term debt has been still account for only 35%. From the maturity profile, we can see that we try to run our company and finance policy a bit more conservative, and as a result, a big part of our long-term debt are scheduled to be repaid beyond year 2020. So our financial obligations are still very safe at this point. For our cash flow, during the first 9 months, we record EBITDA of close to 9 billion baht. At the same time, we have been spending on capex of about 2.9 billion, and we have invested about 2.6 billion in terms of investment in subsidiary during the first 9 months of this year.
I'm so sorry, I apologize. It's the usual explanation of the traffic, but this time it's really true. I was 1.5 hours stuck somewhere around Asok. Sorry, continue.
And for the operating result, we have seen an improvement in a lot of area, especially one we would like to highlight is the inventory day. We have managed to reduce our inventory day down to 108 days from 114 days during the third quarter of last year. The net working capital day also decreased by 1 day compared to last year as well. This has continued to reflect our strong emphasis on the efficient operation within our company and operations unit. For the segment highlight, as we have mentioned earlier, we have seen the rising raw material price, particularly in terms of the salmon business, and tuna business has become a strong, putting pressure on our operation. During the first 9 months of this year, the average tuna price was at $1,400 per ton, which is up 15% compared to last year. The salmon price during the first 9 months of this year has been up to about 61 Norwegian kroner per kilogram, up by 51% compared to last year. These two factors are the key factor that's been putting pressure on our profit margin during the first 9 months of this year. On the other hand, the shrimp business are still doing very well. The shrimp raw material price has been up by 4% to 178 baht per kilogram. For the business segment, we have break down our business into 3 key business categories: ambient seafood, frozen and chilled seafood, and pet care business. For the ambient seafood, we have owned a number of significant brands in the key developed market, like Chicken of the Sea in the US market, King Oscar, John West, Rugenfish, Petit Navire, Malibu, and Parmentier are the leading canned seafood brand in the European continent. And in Thailand ourselves, Select Tuna brand is the #1 leading in terms of the canned tuna brand in Thailand. For ambient seafood business, we have seen a marginal decline in sales by 4% compared to last year. In terms of gross profit margin wise, we have seen some pullback. This is mostly due to the fact that the tuna raw material price has been increased unexpectedly during the third quarter. So we have seen some margin pressure in our ambient seafood business. But in terms of the quantity wise, we still see a stable product quantity. It has been barely changed at 90,000 tons run during the third quarter of this year. For the frozen and chilled seafood, we have record our sales up by almost 15%. As mentioned earlier, the salmon business has been experienced a significant increase in terms of the raw material price. So as a result, despite the quantity sales are still growing by 6%, the value sales have been growing by significantly more, by close to 15%. That has been factoring in some of the product repricing along the year that we have done with our customer and successfully done with some of our contracts so far. As a result, but still, for the year-on-year impact, we still see some gross profit margin pressure from 11% during the third quarter of last year down to 9%. But nonetheless, due to our endless efforts in terms of the repricing, talking, renegotiation with our customer, our gross profit margin has seen some improvement from the second quarter of this year already, from 8% during the second quarter to 9% during the third quarter. we believe that we will continue to improve in terms of our gross profit margin going forward. For the pet care and value-added business product, we have seen a significant improvement in terms of both sales and quantity. These are coming from the vast growth and successful business in terms of our pet care business, in which we have launched some of the new product. We have won some of the new orders from our client, and the key improvement in terms of this business segment is actually the value-added sales that we have seen a significant increase in terms of sales. And as a result of these high margin sales have been improving, our normalized gross profit margin during the third quarter of this year has been improved to the 26% level. So for the first 9 months, we have reported a gross profit margin, gross profit in terms of value of 15.2 billion, of which have been contributing from the 3 key business. And as a result, we have reported out from the total sales during the first 9 months of 100 billion baht. The gross profit margin that we have achieved was 15.1% for the first 9 months of this year. Okay, and that's sum up the presentation for the third quarter and then the first 9 months result from Thai Union. I would like to have York mention with us a bit about the summary of what had happened during the quarter.
Yeah, thanks, Khun Best. Let's jump to actually this key page. This is what we've presented to our analysts. This is what we presented to our board of directors. These are the 5 things that I think, looking at Q3, are topics to understand and to take home in your analysis and your review around Thai Union. The first one, Q3, we exceeded $1 billion in revenue. It has been a very strong quarter for us. We have strong growth quarter over quarter, year over year to Q3 2015, 2% still organic growth, and 5.8% growth is coming from acquisitions that we have done. This is a further sign that not only our existing business has a strong underlying growth momentum despite of headwinds, but it's also a signal that our M&A strategy to drive the company forward with growth based on M&A is indeed successful. Strong growth. So that's the first key topic to take home. Second topic, not as good. We talked last quarter about our salmon business. We have lost in the first half year of this year $10 to $11 million only in our chilled salmon business in Europe. We had planned that we can turn this around in the second half of this year and at least be break even in the second half of this year. This has not been successful. We are better than in Q1 and Q2, but we still contribute a loss of around $3 million in Q3 out of our salmon business. Prices have again risen in salmon in Nordic krona. We have pushed part of the price increase to our customers, but we have not been successful to compensate completely with customer price increases. The business is still in a negative margin situation, and the recovery is taking a little bit longer. The good news out of this is that now in Europe, in large newspapers, in Germany, in France, in the UK, people are starting to talk about the high salmon prices and that this will affect consumer prices in the markets. I regard this as good news. There's realization that the salmon prices, the raw material, is extremely expensive, and at one stage this will affect consumer prices to go up. So we do hope that at least for Q1 and the start of next year, we will be out of the most difficult situation. But I guess key message, the recovery is coming, but it is slower than what we had anticipated, and we still had in Q3 a negative gross margin. And in Q4, I think we also need to expect the business will not turn to profitability in Q4. Prices for salmon are simply too high, and we've not been able to push this to customers. Third topic to take home from our Q3 performance is that also in our tuna business, the raw material prices are not developing in the direction that we had anticipated and expected. As you remember, in Q1 already, end of Q1, Q2, tuna prices increased unexpectedly to beyond $1,400. We had then assumed that prices will soften in the second part of the year. This did not happen. Prices are still on a $1,400, $1,450 per ton basis. So raw material prices also in tuna are higher than expected. And there is a huge pressure, pricing pressure with private label suppliers, also here from Thailand, but also from China and Indonesia. Prices are in a way that we also could not completely compensate this with customer price increases. And our branded businesses are more under pressure than we had hoped. So there is a margin effect in our tuna business from the unexpectedly high raw material prices. We are now receiving forecasts that assume that even in Q4, prices will not drop substantially below 1,400 where we are today. Usually at the end of the year, prices soften and go down, which this year did not happen. Some of the reasons for this, number one, we have, and we do realize that there is a stronger push to sustainable fishing, which is good news. People move to MSC certified fish, people move to pole and line. There's a much stronger, a much more aggressive push to sustainable fishing. Fisheries are accepting this trend. I think this is a good news, but I think we have to accept that this will cause some price mechanisms in the next couple of quarters. Second topic, we have in the Indian Ocean the red flagging of yellowfin tuna, which has led to the industry accepting a voluntary catching reduction of 15%. We have committed to buy and to process even less. We said we process 20% less than last year after this red flagging in order to preserve yellowfin tuna stock in the Indian Ocean. Also, this is of course increasing the price pressure in the tuna catch. Fourth topic, we of course did realize that Q3 is not going as positive as 1 year ago. So we initiated much stricter cost control. We had a very strong emphasis on our cost structure. We have structurally reduced our SG&A spending by changing some of our profit sharing programs in the United States. We have taken out SG&A cost. We have started to capitalize R&D expenses for projects that will go into production in the coming year. And we have a lower cost of debt. We are now at a cost of debt of 3.2% interest on our interest-bearing debt. That's a very, very low level, very competitive also due to a very attractive Thai debt market that is helping our operations. So very strong cost control. Our SG&A is below 9% in Q3. I think this is a bit too low probably, but we expect for the year to be clearly below 10% SG&A, and I guess going forward on a run rate around 9.5% is realistic. And the reason for this is that we have structurally adjusted our cost base in SG&A. The fifth topic I'd like you to take home, despite the pressure in gross margin, despite the pressure on our operating performance, we have been able to contribute a very, very solid, a very strong Q3 in our net income, 1.6 billion. I think we were ahead of market expectations. Why have we been able to deliver that? We have a very strong, solid base business, but then we have also made changes to some of our minority investments. We bought out our US chicken of the sea frozen business. We bought out the minority shareholder, 18%. We own now 100% of this business. This has reduced the non-controlling interest eliminations from our consolidated financial statements. It has helped us to structurally reduce our SG&A expenses in the US. And we had substantial tax credits in Europe from the losses in our Merlions, in our European chilled business, chilled salmon business. And we released some legacy liabilities, tax liabilities that we realized are no longer actual liabilities. So we released the accruals from the balance sheet into the profitability. So I think 5 messages, pretty mixed, strong top line, strong bottom line, in between not so great. We need to work on this, but I think with an emphasis on cost, with a focus on productivity, on operational excellence, on executing our key strategic pillars around innovation and growth, we are in a very, very healthy position to move forward. And these are my key comments on Q3. Maybe you want to hear a little bit about Red Lobster. As we have announced a couple of weeks ago, we have made a strategic investment into Red Lobster in the United States. Red Lobster is the largest seafood-centered restaurant chain in the world, also in the United States. Red Lobster has around 750 restaurant outlets. All of the outlets are owned by Red Lobster in the US and Canada. Overseas and outside of US and Canada, they are managed through franchise partners. Red Lobster has a revenue of around $2.5 billion US, and they run approximately on an EBITDA level of around $140 million US, adjusted EBITDA in Red Lobster. We have made 3 major agreements with Red Lobster. Number 1, we have invested into 25% common equity for an amount of $230 million. That is a EBITDA multiple of around 7.4, if I recall that. That is a very attractive EBITDA multiple, very attractive valuation for us, very good step in on a relatively low valuation basis. We have then invested a further $345 million US into convertible units. These convertible units, or it's like a convertible bond, converts into 24% common equity anytime from today up until the expiration of 10 years. So we already now have, for the total amount of $575 million, 49% of the economic interests of Red Lobster. And we did a third thing. We have agreed to make additional investments into Red Lobster after a certain period of time. So I think we have a very good partnership here with Golden Gate Capital, who owns the remaining 51%. They're very happy with us, and we are extremely happy with Golden Gate Capital and with Red Lobster and the management team. Excellent reception by Red Lobster, the employees of Red Lobster on the board of the company. We had our first board meetings, our first performance calls, and the feedback is very, very positive that we have joined Red Lobster here on the board and as a key strategic investor. The supply chain collaboration has been kicked off, and we are now investigating areas where we can increase our supply to Red Lobster and our support to Red Lobster. And what I mentioned before, key focus here is not only plain commodity peeled shrimps. The key focus here is to collaborate on menu management and on added value items. This is where we feel our key competence is, to work much more with their kitchen, to work on how can we bring our competency to help Red Lobster to have a better menu and to serve consumers better with healthier food. The key performance metrics for Red Lobster are on track, so they have a little bit of an odd fiscal year. Their fiscal year starts in May for some reason. So for the first 4 years, for the first 4 months of their year, they have exceeded budgets by around $5 million compared to their operating plans. So also their operating performance is a little bit ahead of what they had planned. The expected net income in Q4 for Thai Union is between 60 and 80 million Thai baht. This is from accounting for the first tranche of a preferred yield or interest payments on our convertible bond, and some other topics like management fees and things we have agreed with Red Lobster. So we believe this investment is immediately accretive to Thai Union and will immediately add to our bottom line. Okay. With that, we move to Q&A.
Thank you, Mr. York and Mr. Best. And that has wrapped up our presentation. Now I would like to open the floor for Q&A session. Any participants who have any questions, you are welcome.
I have three questions. The first one is, how do you see the organic growth of the consolidated revenue in the next 3 years, given no additional acquisitions? The second one is, do you see or expect a significant margin improvement in the next 3 years? The third one, what are the key concerning issues that may derail your business projections in the next 3 years? Thank you.
Okay, first one, organic growth. I think we have shown quarter over quarter, year over year, actual organic growth for our underlying business without acquisitions. Of course, acquisitions have really helped us to exceed usual market expectations on growth, but even our underlying business is growing very healthily. We have our pet care business that has been growing with 10%. That is completely without acquisitions. We have our added value businesses here in Thailand that are very strong and are very healthy. Our branded business in Europe shows a very strong growth in range of 6%, 6 to 6.5% in Europe alone, with exports to Africa. But I agree with you. There's, of course, some topics that we need to look here in Thailand for our OEM business, where we need to put more emphasis, how can we roll out innovation and convert this into healthy growth. What's the long-term outlook? We have given a target for our organic business, for our base business, to grow double GDP. GDP growth on average is around 2.5%, 2.8% if you look globally. So we do expect our organic growth to be in the range between 5 and 6%. That is what we have given as a guidance to all our operations in Thailand, in the US, in Europe. And if we look in a more long-term perspective, this is what we also feel is achievable. Of course, supported through activities in the emerging markets where we have put a lot of emphasis. We have started an activity in China. We've established Thai Yun in China and will introduce here branded and non-branded frozen seafood in Chinese retail. Our activities in the Middle East are organic growth. It started from a greenfield. That is happening, and also in the ASEAN region, we are strengthening our activities. So organic growth, long-term guidance for the next quarters and years, double GDP. May not be every quarter we can achieve this, but I think on the long term, this is where we need to be. Gross margin was your second question. Yes, Q4 was not a great quarter in terms of gross margin. I think there is the salmon effect takes away roughly 0.7% from our gross margin, and then you have the tuna effect that we had that probably takes away another 1%. Usually we should now be on our business in a gross margin range of 16%. That it would be a healthy margin structure for us at this stage. We are slightly depressed due to raw material pricing. If you again look in long-term development, especially our focus to grow in branded, our focus to roll out innovations, as well as our activities to reduce production cost with new automation, with new equipment that we are buying, also here in Thailand, to move from manual labor into more automated work processes. All this should lead to a margin step up by 2020 in the range of 20%. This is pretty aspirational, this is pretty aggressive, so can we achieve it? We need to see how we can grow quarter over quarter, but I think the trend is there if we eliminate the raw material price effect. I think key risks over the next 3 years, and I think in Q3 we have seen some of this. Of course, some of it is in raw material. The shift towards sustainably caught seafood is something that the industry has not experienced so far. This is very new to many players in the industry, and it is unclear how this leads into cost increases, how we can push these cost increases into consumers. Second key risk is related to the political environment that we are facing. I think Brexit is something that is leading us now in Q4 to increase consumer prices in the UK. The strongly reduced or weakened British pound forces us to increase prices in the UK. Like every other importer, also we need to push the inflation effects from the weaker British pound to consumers. And it is until now not clear if this has volume effects, if we can achieve all of this. So there are risks around this. The first couple of weeks of Donald Trump as the new President of the United States seem to be welcome at the stock exchanges around the world. So the US stock index increases, the US dollar gets stronger. I think it's too early to make an assessment what this really means, also to trade policies, to economic policies, to the Federal Reserve in the US, how they want to drive their exchange rate policies and their US dollar related policies. So I think there are increasing risks in the market, macroeconomic risks, political risks that we need to deal with. So I think we need to accept there is a little bit choppy water ahead. And these are things we need to deal with. I hope this answers your question.
There's a question from online channel. In terms of what is Thai Union research and development plan, and how can we quantify the success KPI of these R&D efforts?
Excellent, excellent question. Let's answer it in those two topics. What are our strategies? Strategy is very clear. We have established the GII here in Thailand, our global innovation incubator. We have now approximately 80 pure research-focused scientists, scientific supporters, very eminent people at Mahidol University. We have a compound there. We have 2 floors there at Mahidol University. We have invested into this very, very heavily over the last 2-3 years. We will continue to invest into this, also in connection with the government policies to develop Thailand into a country with more food and better food innovation and with a stronger food, organic, indigenous food industry. We are fully supporting this and we will continue to invest. We are now discussing the next phase of our innovation incubator and the establishment of a innovation campus and to expand this from focusing on tuna, also looking into our frozen business in shrimp and other activities. So I think that we have a lot of investment into innovation. What are the KPIs? The KPIs, I think I would look at three main contributors. One, of course, we need to manage the innovation cost, the R&D spending. Here we have a relatively clear roadmap on how much money we want to spend each year on innovation. And we're controlling this in line with revenue growth that we create from innovation. And that is the key performance indicator. How does revenue increase on our P&L from innovation? And what do? We are counting any product, any SKU that is younger than 3 years, and that comes from our innovation activities. So any product that is younger than 3 years, we are counting as innovation revenue. The target for our innovation revenue is 10% by the year 2020. By the year 2020, we plan to have $8 billion in revenue. 10% is 800 million. So we want to contribute $800 million in revenue from our innovation activities. And that's the number one key performance indicator. Number two key performance indicator, directly linked to revenue, we do expect to earn more than 25% gross margin on products that come from innovation. So we do two things. We drive growth, plus we improve our gross margin structure by rolling out innovative products that earn higher margins.
Next question is actually probably due to our recent acquisition. The question from online asking if Thai Union is planned to diversify into the restaurant business.
I think we need to experience Red Lobster. Let's sit on the board for a couple of quarters and let's understand this better. I think it's too early for us to say that this is now a huge new investment focus for us. We want to learn this, we want to understand, can we operate it? And I think then at a later stage we will decide if there are more acquisitions around this.
Okay, next question come if Thai Union is interested in merger acquisition activity, will we emphasize more on the upstream or downstream business activities?
I think up until now we've focused very much on downstream activities. Upstream, that is looking at the resource, at aqua farming and fishing, that has not been our focus so far. Our focus has been to go downstreams into markets, communicating with consumers, into branded businesses. I don't expect this to change anytime soon.
The next question come on the want to update on the marine ingredient new business division, and when do we expect to see some contribution from the marine ingredient division?
We have now made the final decisions on the technology for our oil refinery that we are building in Germany. We are in the active process to set up the company. We have identified the piece of land where we will build the new factory. It's an investment in a range of around $10–12 million. The machines will be ordered until the end of this year, latest in January, and the plans are to have the first oil out of the refinery by end of 2017, to be more precise, in Q4. Is this then already mass production? Certainly not. I think this is more sample volumes that we can use for further qualification. So revenue ramp up is going to start in 2018.
Next question is probably due to the salmon business difficulty this year. I mean, how do you see the outlook of the salmon raw material price into year 2017?
Salmon is different, for example, to shrimp. Shrimp goes through a cycle of 4 or 5 months. Salmon goes through a cycle of 2 years until you come from a baby salmon to a salmon you can then process. So I think we do need to expect that the salmon prices will not substantially reduce in the coming future, also not in 2017. So the key focus for us needs to be to put all costs related to salmon to consumer prices, because we do not expect that salmon prices will substantially reduce in 2017.
Okay, and the last question on the list, I mean, given current financial position, can we continue to pursue on the investment and M&A activity in the future?
Yeah, I think if we look all in, our net debt to equity is, of course, now above 1 with the investment in Red Lobster. We are now on a net debt to equity of around 1.2, between 1.2 1.3. I think 2 focus areas. One, of course, we need to focus again on cash flow. Cash flow has not been super great in Q2 and Q3. Q1 was, I think, good with 4.5 or nearly 5 billion Thai baht in positive cash flow. We need to refocus on cash flow to reduce our external net debt. And on the second part, our comfort zone for net debt to equity is between 1 and 1.2. So I think we are still pretty much where we want to be. And we've always said for the right acquisition, we are also happy to go up to 1.5. But then it needs to be the right acquisition. So yes, M&A will still be around for us. But as you can imagine, we don't expect very, very large transactions to be executed in the near future. What would the US elections mean for Thai Union business in the US? Again, as I said, it seems the economy in the US is looking positive at this development. They're looking positive at make America great again, whatever that means. with a great American economy, I'm sure consumption of seafood products and of our products will increase. We are right in the middle of lobster, shrimp, and tuna, and very valorized products. So we're very happy with a strong U.S. economy. If this is what the election brings, then this is something that also helps Thai Union in our performance for our U.S. operations.
If there are no further questions, on behalf of Thai Union Group, I would like to thank you all participants for joining our Opportunity Day. We would like to adjourn the meeting now. Thank you very much.
Thank you so much.